Bitcoin continued to fall yesterday, and in the last 24 hours we have come down and hit our target. In this video we're going to talk about what potentially might happen next after this has occurred. Now, as I get into this video, if you find this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. And if you're looking for a little bit more from the crypto space, why not check out the Patreon services or become a member here on YouTube. We do offer an awful lot more for our members, so why not check that out if that's of interest to you. As I said, linked in the description below to Patreon or via the join button down below. Let's make a start with this one. Bitcoin paired up with USDT on the 1 hour chart, and Binance is our data source. As you can kind of see, we've got Elliott wave theory here. This is the first part of what we're going to take a look at, and then we're going to take a look at the smart money concepts and what the structure is looking like there, and then kind of wrap it all up. So starting with Elliott wave theory, we can see that we had our diagonal fifth wave ending. Okay, this looks to me like an expanding diagonal structure at the end, and to kind of illustrate this, I'll just draw a couple of trend lines on the chart. I will take it from wave 2 peak. It's going to be the easiest way to articulate this. You can see it kind of coming this way, okay, like so. And if I go ahead and take the low from our wave 1 and bring this down over here, you can kind of see it expands out as it pulls back down. There are several rules that have to be applied when we have these kinds of diagonals. The main rules are that wave 3 cannot be the shortest and wave 5 has to be the longest. Okay, we can see those things right there. Other than that, it should be a pretty standard diagonal from that point. Now, if you're looking for more information on understanding Elliott wave theory and what I'm talking about here, then why not check out 𝗕𝗘𝗪𝗀𝗀𝗀𝗀com, linked in the description down below. Okay, so if we are in this ending diagonal, where is the expectation on kind of, where we like to finish? Now, we had this drawn out between 21,555 and 21,808. We can see that right in here. It's about a couple of days ago, we kind of scoped this one out. Now, on this journey to the downside, we can kind of articulate this maybe as a 3-3-5 structure. A flat correction from the peak of this wave 4 down to this wave 5 low point. Okay, now for this we have to kind of consider ourselves in a wave 4, okay, of that fifth wave. So if I draw this in, we kind of have 1, 2, 3, 4, and I think we've got to come down just a fraction more. Okay, so if that is the case, let's go ahead and just make this a little bit bigger so we can see these candles right here. If I go ahead and take that, which looks like a pretty standard 3-wave structure, then our actual ending position should be approximately right here at 21,441 and 21,526. I'll go ahead and delete the fibs off. You can see it's slightly overextending out of what we were expecting. You can see it right down there. So all in all, anywhere really now between 21,440 and where we are, I think is pretty much fair play. So really just kind of assessing those smaller counts and what is going on. Not a necessity to finish this one off, by the way, guys, because we can just articulate it as a 3-wave structure anyway, using some kind of WXY just in here, or ABC, just to kind of illustrate that. So we do have this kind of structure already here, but if we were to really finesse it, would say you're probably going to have to come down just that fraction more before we can start to talk about reversal, which I think is something that we should be talking about. Now, I think there's going to be a bounce. I don't think it's going to be much of a surprise to most people who have seen a pretty decent correction to the downside at the moment, and we haven't crossed this origin level down here for this 5-wave structure to move upwards, which basically means everything is still in play for a bigger move upwards yet. So we can't kind of rule that out just at this moment in time. I think we're about to see some stuff getting priced in. We've seen a lot of news and kind of fear seeping into the space from inflations and interest rate hikes and all the stuff that we already know is going to happen. We also see Silvergate Bank kind of winding up and all that kind of stuff. These are things that are not black swan events. These are things that we've been talking about on the channel for quite some time. So, it's one of those. lows. Like essentially, we still think that there is some room to the upside until a lot of that stuff hits the fan, if that makes sense. So watch out for that. Okay, so ultimately, we've kind of had all this correction to the downside. We've got two things that are going to happen, or one of two things that are going to happen. We're going to have a really nice, significant bounce to the upside. Okay, and then we're going to correct down, and it's going to be pretty brutal. Alternatively, we actually marry up with our first 5-wave structure, which is this one over here, and we actually go up in that kind of 1, 2, 3, 4, and 5, and we just peak up into this yellow box area here between 26,888 and 27,979. It's still technically valid. I think this one's less likely now, though, considering everything that is going on. We can, of course, articulate this 5 waves as an expanding or irregular flat correction. Okay, we can kind of look at it like that. So it's not a necessity that we do that, but it is an option that we should consider. So one of two things. Essentially, we're going to move up into our range of around 24,000 to 24,500, which would be basically a 3-wave correction, in my opinion. Could be a zigzag, but we would be looking for something to that effect. And then that would be a nice correction to then kind of move down after we kind of get all the interest rate hikes a little bit later down the line. Or we're going to have that kind of impulsive move, which I'm not expecting, but we'll see how it kind of goes. So for the most part, we're coming to end of structure, which basically means it's time to maybe start thinking about a few small long positions. I wouldn't want to be going long because I think ultimately the market is bearish, so we don't want to be going against that necessarily for too long. But I think there's a longer opportunity or a long opportunity to the upside, just a fraction of out of that. So anyway, so as we can kind of take a look at the stochastic RSI, if I can get my words out, we have an oversold daily, 8-hour, 4-hour, and 1-hour. This is also signaling that momentum is about to shift upwards. It might not be that big of a move. It might be a big move. It might not be. We don't know until we start seeing it. But an upward move is likely. We've got momentum behind the price action, but do expect that fraction more. Probably liquidate those longs before it actually takes off, that kind of scenario. But ultimately, the structure is the structure. It looks like it's pretty done from an Elliott wave theory, and we can start thinking about seeing a little bit more green in the market, at least for the next couple of days, maybe over the weekend. So let's take a look at smart money concepts, right? Smart money concepts tells us what is going on at a bigger macro level. Although this is still the hourly, it gives us the indication of the market structure. So market structure here is telling us that we had a change of characteristic which turned bearish. This turned bearish technically on the 24th of February at this level on the hourly chart. On the larger time frames, it's always been bearish, but on the smaller time frame, we had that turn here on the 24th of February. Then, of course, we get a break of structure or a continuation of this trend to the downside. This essentially happened on the 3rd of March, and then we got another break of structure, another continuation of that trend to the downside. And again, this one got confirmed on the 7th of March. So what we can see here is that essentially we have that bearish state of play, and it still remains true. So nothing has fundamentally changed here, but we would be looking for a change of characteristic to the upside if we want to kind of see that next bounce upwards. Now you can kind of see that we do have this fair value gap. This is created from an imbalance in the order books. Essentially, some institutional player comes in, drops on the market a load of Bitcoin, and basically in this little area, this little gap that was left behind, there was no one buying from them. So price jumped from here to here where someone was willing to buy it. That created this gap, and price loves to come back and fill these gaps. So just keep that in mind that we are likely to come back up and grab that. You can see all previous gaps down here have already been filled, although they do have this big one here that has not yet been filled. Okay, so keep an eye on those. I do think we'll be gravitating up towards those areas. So ultimately, yeah, that's kind of where that looks like, where we do have a weak low indicating that we're likely to come down into the new local lows, which wouldn't be a surprise. We've been talking about that. We've been just talking about how that 5th wave looks like it needs to come down a fraction more. We do have a strong high at the moment. I would expect that to kind of get broken. And of course, we do have our internal order blocks right in here. All of these ones are your red selling order blocks. So we would expect to see selling occurring within these areas. Not a guarantee because it all depends on the kind of the volume that's in there, but essentially these are being indicated to us that are likely areas where we're going to find some selling pressure. Okay, so for the most part, it doesn't look overly positive on smart money concepts, but when we take smart money concepts and we couple this up with Elliott wave theory, we actually end up thinking that we're likely to find a reversal point very, very soon. Although not really being indicated massively here, we're yet to see any kind of major changes or minor changes of characteristic, i.e. going from bearish to bullish. We can see some minor changes here, bearish change and a continuation of the bearish change, and we're yet to see any of those on the minor side, let alone on the major side. So everything on this hourly chart looks like we are still bearish at the moment. Now if I jump to the 4-hour chart, let that one load up, we can see that we have a strong low. Okay, so our strong low down here at the moment is essentially going to be the double bottom. This is where I think we're going to likely find ourselves moving up. This is also our discounted area, and we have a weak high, indicating that we are still within that market structured move to the upside. You can also see that we've had no kind of major on the 4-hour change of characteristic to the downside. That would only happen if we were to drop down lower than this local low that we've had at the moment. Basically, this is indicating to us on the 4-hour chart that we have that bigger kind of ABC structure, that zigzag pattern. So we had the 5 wave up here, right? If I draw this without actually getting that lag on there, 1, 2, kind of 3, 4, and 5, right? We had this kind of 5-wave structure here. Then, of course, you know, what we're looking for here is to see a similar kind of thing occur on this side. That's kind of what this 4-hour chart is telling us, and kind of confirms that because we have a weak high and a strong low. We also have no bearish change of characteristics, which means we're still bullish, right? Now we have all the minor changes. In fact, there is a minor change of characteristic and break of structure within here at the moment, but ultimately from our 4-hour chart, it looks like we've got progression upwards. Now, if I take a look at the 8-hour, we can see that equilibrium is a little bit lower. We still haven't filled the fair value gap, and we are in a bearish state of play on the minor characteristic changes. So again, this one lines up more with our hourly, although that 4-hour is somewhere slotted in between. Basically, expect volatility. We also have a weak high on that high side, so we're not really expecting to kind of push past that $25,000 level, and we have a lot of fair value gaps in here. So the higher the time frames we get, the more bearish these things become. If I jump over to the daily chart, for example, we can see in here that we're still in this much bigger bearish state of play, and we haven't changed out of that. So it's just important that we kind of reflect on, yes, there's some minor movements occurring. I do think we're going to start seeing a bit of a move to the upside on the smaller time frames, but the bigger macros are very, very bearish, and we don't want to forget that, because essentially the macro picture is the one that is going to play out overall. And of course, you know, taking a look and paying attention to the market structure is very, very important, which is why we like Elliott wave theory and we like smart money concepts, because it doesn't rely on something as simple as drawing a trend line and assuming that we've drawn it correctly. There are lots of ways to kind of make a trend line and make the charts be perceived bullish when actually they are bearish, and vice versa. So it's important that we look at the market structure, look at the supply and the demand, and make our analysis and make our assumptions based on the flow of money and how people are actually acting and participating in the markets, rather than just relying on higher highs and higher lows and trying to make financial decisions from something as simple as a trend line. Now, with all that being said, I do think we're going to see a big drop to the downside. I think there's a lot of fundamental reasons for this in the bigger, broader economic climate. I'll talk about the bigger macro picture this afternoon for Bitcoin and kind of the rest of the crypto market. So do pay attention and watch out for that one. If you haven't yet joined us in Discord, check it out, linked in the description below. If you're looking for a little bit more, why not check out Cheeky School and Patreon, linked in the description below. Until the next one though, guys, have a fantastic day.